story, then you will trade it correctly.
Yeah.
But the story doesn't have to rely on open print. If it wants to duck down underneath open print and collect liquidity and rip up, then that's what it's going to do.
Yeah.
But you have to understand then what is that story around open print.
Yeah.
And it might not be what you find.
Yeah.
Yeah, I traded QQQ this day. We had a perfect pullback to previous day high. I mean, that was a really tasty trade right there on Monday morning. And,
oh, wow. It was perfect.
I missed it initially, and then I hopped in previous day high.
That was perfect. I just seen that. Hold on. That was a perfect pullback. I remember you saying that because I actually got back in this long. Because when you were longing, when you were longing that off previous day high, I was also getting back in because that exact same reason. Yeah. Look at this. Perfect. Oh, dude, let's go over this trade because look at this is the definition of using that.
That's not where I got in. I got in before that.
Oh, you got in this one.
Yes, that's where I got in. Yeah. Yep.
Oh, dude, yeah, that was perfect.
That is where you added on SPY, isn't it?
Yeah.
I think that's where you added. I seem to
yeah.
Where you were.
Then I got back in on this 1245 candle. Okay. Closing back above the 9 here. But yeah, look at that on Qs, man. That was beautiful. Rip above it, waited, patient, realized sellers couldn't hold. Boom.
Yeah, that was great risk for me, especially when I saw SPY ripping through previous day high, not doing a pullback at all.
Yeah.
I was like, okay, we're definitely moving. I'm just going to use this little hiccup as a chance to get some good entries, get a good fill. And,
yeah.
And I think I made nice.
Well, that's.
I think I made 1-3 on that.
Yeah, well, that's. I mean, we talked about missing trades, dude. Right? Like I felt like when this hit end of day, and I missed it. Like that's just shit we put in our head. It's like, we constantly think we need the perfect trade, the perfect day, the perfect execution. It's like, dude, our only job is to identify an opportunity. That's it. A good one, right? I'm really convinced if you could learn to be patient enough to just trade when your edge is actually present, you can literally have anything you want out of this market. Like if you can, if you could get a general understanding of what to look for and actually only trade that, you really cannot lose. I look at my losing trades this week, and it was all because of emotion, all of them. And we're gonna get into them, but yeah, that was a lovely trade right there, lovely day. Once again, I then took that. I just utilized this gap here, right? And I'm going to be making a YouTube video on structure because I think it's a topic that not enough people. I want to break into structure a lot, but you can see here very bullish conditions, ripping. We get a pullback. Now we get structure off this 503 level. We're getting a retest. But we're also getting a gap here between price and the 9. So at this point, I'm going, okay, what happens if buyers defend this? If buyers take advantage of this bearish structure, how can I make money off that? Right? So I'm like, okay. So notice this gap is keeping me from a dirt short play. So not only am I saving money by not losing money, but now I'm on the right side of the move. You know what I mean? And that's where that using that moving average that way is going to be so powerful for you because this is a bearish, like these last 10 candles, is somewhat bearish structure, right? We got a lower low or a higher low. So it's like, okay, what happens if it gets invalidated, right? And that's exactly what happened once we closed above the 9, above structure. I'm in this trade. My stop is going to be below this candle, right? So this is about a 30-cent risk, and I'm going to target the highs. We ripped right into it, booked profits. Once again, Darren, somewhat extended from that 9, so I took it, and I was very glad I did because this immediately started to sink. So law of polarity.
Yeah, I was not looking for this sharp pattern, this double top. I mean, it's all-time highs. There's no supply zones up there.
Yeah.
So, like, I was not sitting around thinking that this thing was gonna
sink.
Come off like that. And when it did, I don't even think I put on any trades for the rest of this day. But it just surprised me. Like,
Yeah.
This is not the type of trade where I look back and I go, oh man, I should have got in short there. Like, dude, it's all-time highs.
Yeah.
Like, there's no supply zone there. You should be bullish.
Yeah.
At this point, that candle at 115, you should be very, very bullish. You should be considering longs if you're not even in the more taking profit like you were.
Yeah, 100% agree. Yeah, and that's the thing we constantly talk about, though, right? It's like that I don't need to trade today. Like I don't need yeah, we miss it. Good. Like I don't care. Like I only trade my edge. Like and then when I catch it, I'm usually done unless I see an amazing opportunity. So next trade, this was a really good trade too. I was actually rather pumped with this trade. My profit taking was let's talk about it actually. So we have open print here, and I'm just charting off SPY. Let's see here. Which day was this? This was 2/13. Okay, so you're gonna see here the difference between SPY and SPX though, with the opening candle, and I want to show you guys how it could be used for your benefit. So I took this off SPX, and you can see here the open print on SPY is much lower than it was on SPX. Now, once again, I'm just using this level as a level to get a better understanding of the story. Instead of looking at it in a mechanical way, like Darren was saying, where we must get do we watch SPX? Do we watch SPY? How about QQQ? No, I just want an understanding of the story to identify an opportunity. So when price ripped below open print on SPY, you can see we came down below. And then on this candle, we rip up, much like on Friday, but just a little tighter, back above pre-market low. So this is very bullish. So when playing a reversal, this is usually how I do it. And in reality, I like to call it a shift in market conditions. Because when we're closing below pre-market low, a lot of traders will tell you, gurus, they'll be like, oh, you must be short here. Now, I'm not exactly objecting with that, but what I'm saying is based on the conditions of the market currently, buyers have been much stronger. So when we come down below pre-market low, and you can even notice, like this was CPI, we're still closing above the 9 in a way. So like I can't really I once again, I'm not going to go long on this candle, but I'm just going to document that in my mind. Now look at SPX as well. SPX was closing way above the 9, and it's because there's no pre-market data. But still, I'm just going to note that. I wanted to long this on this candle, but I didn't because of that gap over here. So once again, I was just patient. I was just extremely patient. Price rips up, comes down, and at this point, right, this is the money moment. This is where buyers are tested. So this is that moment I was telling you about in the beginning that I look for every day. I'm looking for a moment where there's a battle and one side is going to lose. If sellers win this battle, I'm rather bearish back down to the lows. Like Darren was saying, the high a day, the low a day, right? Whoever holds it. usually trade with. But if sellers try and bring price right into open print, I literally had the best entry on this. I was very proud of it because I usually don't just enter blindly like that. But we ripped right into open print, closed on open print here on SPY. It got a rather large gap between price and the 9, went long in hopes that the gap would be filled and that buyers would still show strength. So there's a couple of things to point out here. I'm longing because sellers lost it here and they lost it here. So sometimes it's not about who's winning, it's about who's losing, right? So in my mind, I'm going, sellers were in control right here, lost it here, and they tried again and lost it. So now I'm willing to put risk on the table, had a really good entry, and I caught a move. So I got long here on SPX at 4958 and caught a move right here into 4968. So this was I know it only looks like 2 candles, but this was, or actually, I'm sorry. Where did I sell this? Yeah, that was it. I sold on this candle. So I went long from here to here. This was a really good trade.
I got in the same one. I really like that trade. I had a zone right there at 49585, and finished that little market balance. Right there from I guess around market low.
Yeah, it was a good one. The only thing on this trade that I wanted to kind of question, I took profit right when this candle closed green. I went back and watched this, and if I could do anything different, I would have held this trade a bit longer. In a way, I'm glad I didn't because it got kind of choppy, and I looked at the premiums. I sold my premiums for 10.5, 10.50, and I think right here they went up to like 10.80. So holding really wouldn't have made me more money, but once again, it's following a structured process that's gonna give you results, right? So
yeah, this was news day. This was CPI day. We had huge selling in pre-market, so to be longing into that selling, I feel like was brave in and of itself.
Oh yeah, that's what it was.
We were playing the story, but I also took profits pretty early, and
it was choppy. Yeah, longing into that. It definitely agreed. And then price came back down, tagged open print beautifully from perfect sell-off. I did not catch this. I took a bit of a...
I did this short on SPX, and I held from open print down to that first green candle right.
Oh, it closed above the 9.
I got out.
Dude, that's a banging trade.
Mad. I look back at my contracts, but hey, I can't complain. I got a 1 to 3 on almost both of those trades.
Yeah, that's the story. That's the game. That's exactly how it's supposed to go. That's a very good trade. Lovely. I like how what I love about this trade is even though we were closed above, we still got that gap in between price and the 9 at a critical level, and shorting that takes a lot of faith, even though we've seen it work so many times. It really validates the belief in the strategy. So that's a really good play. That must have been very satisfying watching sellers rip all the way down into the lows like that. Yeah, that was a really good trade. I got in short. I kind of Mozzie traded this, not gonna lie. When price ripped up and we were well above the 9, once again, using that gap there for an entry, I was like, okay, if buyers are gonna defend this, we cannot get below this level. But if we get below 49244, I'm short, targeting 490. That was my goal. Using that gap to look for a reversal, fading the short-term trend back into the long-term. And then we got this nice red candle closing right on this. And then we really started to sell off strong. So I entered in this short with my stop below that structure and took this down to here. This is why I love SPX, dude. I made 130% on this.
Yeah. Off probably 3 candles.
Yeah. Nah, it was very, very fast. I didn't even catch it all the way down to 491. You got to be very careful right here because I'm going to show you guys on Friday how I let a trade, up over 200%, ended up, only closing like 65% return, which is still a really good trade. But I mean, SPX, if you're trading SPX to be right, you're going to lose all your money. It's not about being right. It's about identifying the direction and like the momentum and getting in, and especially at this time of the day, in and out is how you want to play it. Earlier in the day, it could be a bit different. I like seeing these buyers rip in at the last minute, though. That gave me a good understanding of the next. So this day, your boy made 2 losers this day. This was not, but this is the thing. I took 2 losers, but both of them were in check. I did break character on one trade. I want to show you guys how and why I did it. I was trying to force. I revenge traded. There's no other way to say it. And not only did I revenge trade, but I scaled up and got burnt. So, hold on. Let me go back. So, a previous day high, right? I really liked, me and Novak were just talking about this day. The analysis I had was valid. My behavior wasn't. So I have previous day high mapped out here at 49583, right? That's the highs from the previous day. Price opens up, rips right into it in the morning, and buyers soak up immediately. Now, one thing I'm starting to play with, notice the gap between price and the 9, super extended into a critical level. We also seen that a couple times this week. That's what my buddy I talk about, Joe, that's what he calls his little like liquidity grabs, right? When price rips well below into a critical level, a little below it. Notice the gap between price and the 9, right? It's worth noting, especially for anybody trading the open. Like ask yourself, when price is selling off extremely fast and violently into a critical level, are you extended from the 9? If so, what happens if a reversal takes place? Like, what does that look like, right? And what I mean is, like, don't necessarily just see a red candle and just assume it's going to be bearish, right? I've learned to ask myself, how far away is that 9? And does a reversal make sense? I didn't take any of this. We sold off below it, came up for the retest, boom. It's my first short play. Took this short. My stop is going to be below, above this candle. But in this scenario, it doesn't even need to be that high, right? Because when I'm taking this short here, I just need to see us not close above previous day high. Very tight stop. I think I lost. I usually am accustomed to losing $250 a trade. This trade I only lost $170. So kept it extremely tight. Then we pop above it. Then we pop below it. Price was all over the place. Came and tagged end of day. I think this was very well. So I missed my long entry here. I was looking for bearish structure to break to get in long. You could see it did. I just couldn't get a good entry, or I hesitated, right, to be completely honest. And then we come back above previous day high for that retest. So I take the market long right here at 49583, right? This is a very high probability setup. I usually do very well on these. And my first target was 49638. which you can see we ripped right into it and above it. But your boy got greedy. The good old greed got me, right? And I'm going to show you guys right here how one act of greediness costed me almost $1,000 this day, right? So once again, I'm up. I'm doing very good on this trade. We close above my target. And I go, nah, I want to make up for this trade, right? I want to make more money. I want to feel better, right? So I hold, right? And to be completely honest here, I probably would have held again just because we closed above the 9 and above the level. So I'm not faulting that. What I am faulting is not bumping up my stop, right? Because at this point I'm up, I don't know, maybe 40%, 50%. There's no reason to turn this into a loss, right? Because you can see the next candle reverses. We closed below the 9. I should have been out of this trade at least with my 1 to 3 locked in, like Darren always says, right? But I didn't. And then price falls down below previous day high and comes up for a retest. So my inability to accept the loss on these two trades, I go, all right, I'm going to scale up here on this retest, playing into the lows, right? So where I've been trading 1 to 2 contracts, I bought 3. And then price comes up, had a great entry, had a great stop, but scaling up is going to alter your results. It's not something that you can just flip a switch. I'm going to go 3, 4, 5 more contracts today, right? It doesn't work that way, right? At least not for me, because when I have my equation that works, right? We talked about it. I like to risk anywhere from 150 to 250 on a trade, maybe 300, depending on how much the contracts are worth. And then I like to make at least 250, 300, or sometimes much higher on my return, right? So I'm right at a 1 to 1.5 risk reward ratio, right? Now, over time with a 60% win ratio, I have consistent profitability, right? My win ratio last week was 78%, which was 11 out of 14 trades. That's profitability. That's how you make consistent money. When you do something like this one mistake here is literally going to cost you the last 3, 4 of your trades, right? So once again, I'm really diving deep in this right now because I need everybody to learn from this, right? Because this is something, I mean, I'm a pretty seasoned veteran trader. I've been trading for like 5.5 years and it still happened, right? This is what we call breaking character. And more importantly, when things like this happen, you have to become accountable. You have to dive into them. You have to be transparent because that is the only way you're going to get past it, right? Just because it was a mistake. Listen, I end up making the money back the next day. I'm really not worried about it's more about not making the mistake again, right? So this was a really eye-opening day for me. I've for the last 2 months, I've had a phenomenal win ratio. So, once again, I think that kind of played something into it, Darren, because, when you have a 93% win ratio for the last month and, you get so accustomed to green trade, you forget how to handle losers. And this is very real, right? Took a loss here. Okay. Took a loss here, trying to make more. And then scaled up, not accepting the L, right? And then it ended up costing me. But
yeah, I mean, I think basically you de-energized fear so much to the point where you believe that.
Why wouldn't it work?
Your trades, you just couldn't fail. Yeah, it happens, dude. I've been in that position before. I guess my win rate hasn't been that good, but lately, but still, it's enough to bring me to profitability. But still, everybody's susceptible to that. And it doesn't matter how many years you've been trading, you're still going to make those mistakes.
Yep. It was really eye-opening, honestly. Like I was, in a sense, I was like, nice. I was like, I was like, good. This is now another opportunity for me to grow. See, we don't grow from winning. If anything, when you're winning, you're actually getting comfortable, right? You're conditioning your mind to think, oh yeah, everything's good. Everything's good. I don't need to, respect my position size, right? Like, just like Darren said, you get in that state of like, I can't lose. And it was more like, and once again, my analysis was on point. I like every trade I took. Um, and, and more importantly, uh, I felt like I was just in harmony with the market. Now, hold on one second. Then grab one, babe. They're right behind you. Don't be lazy.
So this day too, I saw this inverse head and shoulders. I don't know if anybody else saw this. I took this long right here. I took this long right at 1320 at 120, and I was up, almost 100%, and I think I gave almost all back. It definitely was not a red trade. I mean, I did not end up barely making a 1-to-1, and I was just so sure that since it was
going higher,
shoulders,
yeah,
we were just going to rip all the way up to high of day. So I was like, nope, I'm holding. And that's greed. That's greed right there, and we don't really get rewarded for being greedy. We get rewarded for sticking to our process.
Yeah.
And I hit my 1-to-3. I hit more than my 1-to-3.
Yep.
And I wanted more.
Yep.
And I got smacked.
Yep.
So, and that was not the only time this week. Friday was another time where I was up and I gave it pretty much all back.
Yep.
It was very frustrating, and yeah, I mean, this week I'm just gonna focus on hitting maybe a smaller 1-to-3, maybe a smaller return, but not giving back the profits. That's more important.
Well, it's very like you touch on something so important, dude. Because I also made a hefty mistake on Friday where I was up a substantial amount, and like I told you guys, I was up over like 200%, and ended up closing it for like 60. And the thing is like when I look at my journal, what works for me, right? Some of the best weeks and months I have, most of the time it's just consistent base hits, right? Like we get this thing in our mind where these home runs are like, they're a must to make good money in this market, dude. I've had months where I only made 150 a day, still turn out to $5,000 in a month. See what I'm saying? You don't need these home runs. And I'm talking to myself. It's so what really works. Like one thing I do is go back and look at what's worked in the past, right? And be like, okay, like once again, we don't need these huge, massive game hitters. And I think it's more of like, for me at least, it's more of being right. It's really not as much about the money as it is about being right. I feel like, we'll dive into it on the Friday trade I took, but I was so convinced we were going to see all-time highs right here. Took the market long. I just got stopped out of a loser, right? I took the market long up here. Get stopped out of the loser on this candle. Boom. Once again, completely fine. Price is selling off. I noticed the gap between price and the 9. We rip above it. I take this long right here into end of day. We close above end of day, so I decide to hold. Anyways, mega move. Bought contracts for $275. Right here, they were worth $850. Right, so a mega, almost 300%, huge move, and then I end up selling here. And I'm like, dude, are you kidding? Like, come on. You know what I'm saying? What? So
yeah, I feel your pain, dude.
Yeah, and it's eye opening, right? Because when you're in the moment, you're like, oh, I'll take this pullback to 502.36, and then 502.36 rips in so heavy, and if you don't have it set specifically, this is where you're open to breaking character, right? So more importantly, once again, just understanding what works, being able to take a loss, like that's a big one, right? Like, yeah, we had a great trade in the morning. I take SPX long, take a L. You need to be okay with those. you aren't necessarily going to make your money back on the next trade, right? And if and when you do, you better lock that in. You know what I'm saying? Because you end up giving it all back. It's now you're just even more frustrated. So very eye opening. But I want to break down Thursday real quick because we had I had two very, very good trades that I liked on this day that had everything to do with the story, right? So we have, I think, yes, end of day was right here. And once again, using the open to understand the story is paramount, right? We closing below it right here. I didn't put on one trade until this happened. Just couldn't really find anything that I liked. And then we closed below the open, really extended. So I'm being patient. End of day, I want to see what happens. Boom, we rip up and we close above the open. So now I'm going, okay, what do I need to go long, right? My first target, this was on SBX, shows it a little better for some reason. Let me find it. This was 215. Okay. So you're going to see here, SBX had end of day actually tagged, right? So once again, I took the market long right here. So when this candle was green, I longed it at 505, or I'm sorry, 5,005. First target, 5,010. And then obviously the highs. But more importantly, I want to show you guys why I long this. It's because sellers lost the battle. See, understanding that sellers didn't have strength. See, right here, they look like they have strength. They look tough. Right here, they look extremely weak. The only difference is structure and closing above the 9, right? So once again, those two tools, structure and the 9 DEMA, and your ability to understand what it's telling you can really open up a lot of doors for you, right? I mean, we ripped into end of day, and then this candle completely engulfs the one in front of it. So me and Novak were just talking about this. I end up longing this, right? The candle looked a lot better than it did right here. But once again, you're not going to always get the perfect entry. And it really doesn't even matter. If you're trading with conditions properly, you don't need a perfect entry. I find searching for perfection costs me more money than it makes me. It's not about being perfect. It's about okay, sellers don't have it. I'm going to put on risk. My stop's going to be below it. Really nice move to the upside. And then price gets very extended here above the 9. I literally sold at 500 509. I had a really good exit. Once again, it was because the gap, right? So this, I think Darren said it, and I loved how he said it. He's like, trading SPX has opened up a very different understanding of using a moving average, right? Because I've never looked at it this way, Darren. How'd you say that again? I loved how you said that.
Well, if I hadn't ever traded SPX, I wouldn't really, care about the 9 the way that I do it. And the main reason is because of profit taking. And it's because the pullbacks on SPX cost so much that if you're extended, you might as well just take profits because, that pullback right there, it got so close to my stop loss.
Yeah.
Incredibly close to my stop loss.
Yeah.
I held on, and it was very uncomfortable. And after I saw this, I was like, okay,
yeah,
I definitely should have just taken profits because now I'm just sitting there freaking out unnecessarily,
Yeah.
And I could have re-entered on that candle.
Yeah.
I mean, there's a little doji candle representing some consolidation. We retested that consolidation and dipping below the 9.
Yep.
That's a perfect opportunity for a re-entry. So,
yeah. There's always
that 9, I need to know what it's doing when I'm trading SPX. Not so much SPY, but SPX definitely more so.
But this is the thing, right? See, the way I use the 9, I use it on everything. because even like obviously my profit taking is going to change depending on what I'm trading. And one thing I realized though, I definitely seen a lot more. My results in the market have been way better trading SPX, right? For a couple reasons. I think because it pays a lot more, but more importantly, I'm so much more strict with my profit taking that there's no more. I'm gonna hold for the whole thing, right? No, dude, I'm hitting my 1 to 3 and I'm gone, right? And when I don't do that, it's days like Friday and Wednesday where I not only lose or lose money on the trade, but then I just make a whole bunch of break character, right? So it's like we've learned to scale out and use it as a tool. You know what I mean? Because it's really highlighted for me the importance of risk reward and hitting it, right? And how that's our only goal. So
you got to be quick on SPX.
Oh yeah.
So I used to use bracket orders. Recently, I started using bracket orders when I'm trading options on SPY.
Yeah.
And the problem with that is you can just wait for them to hit on SPY.
Yeah.
And you can scale out. But SPX you can't scale out because at least I'm trading one contract. Only rarely I'll trade two. And you can't use a bracket order and just sit around and wait for it to hit. You got to just watch price action, watch the 9-day EMA, and if you're extended, your move happened, and you have to reward yourself, and that requires bam, getting out quick as soon as you captured that move.
It's crazy too. Like I've gotten through trading it for a little bit now. Like I've gotten it's weird. Like you could almost see it in the premiums how the pullbacks are getting and how because when the volume really starts to pick up, those premiums really spike. And usually when that happens, it's time to get out. Because if volume's causing it to spike, that means a decrease in volume is going to cause it to break, right? So once again, if volume's spiking, it can't always spike. So from a profit-taking standpoint, if you see a large spike in the premiums in price, like you're going to see right here on the second trade I took, literally 105% return here from right here to right here, right? Very quick move. And I was playing the explosion to the upside, right? So once again, I use this gap here between price and the 9 coming into this level, right? This is not even an important level. It's just structure. It's intraday structure, right? We have the highs right here. I'm looking to see we obviously got some selling there. But this is what I was telling you guys about fading the short-term trend into the long-term trend. So if you look at just this, right, you're getting a bullish break and retest. But ripping into this we'll call supply zone, we're back below the 9. These last 5 candles are bearish in a way. So what I'm doing is looking for this to be invalidated. And look at the little break and retest we get right here. Little break and retest, right? So we got little structure inside of structure that's inside of structure. So it's like you could always find structure somewhere. So what I'm doing here is, a lot of people ask me about my entries. I identify the gap between price and the 9, and I want to see structure invalidated, this blue line, right? If this gets invalidated by buyers, I now have a spot to stop out, right? Which is going to be below 516. So, boom, we get strong buying, right? So 9 times out of 10, we're going to rip back into the 9 and back to the supply zone because if we break above this structure, that's telling me sellers lost. So understanding what that looks like allows me to put risk on the table much quicker than waiting above this critical level, right? I'm going, listen, in a bullish scenario, this is not going to hold. This is going to be the first thing to break before this breaks. And then instead of putting on risk up here after 40% of the moves already happened, I'm able to get in this with extremely tight risk and catch a really nice move up to 50116. So the biggest thing I want everyone to take away from that is learn to identify the structure within the structure. And if it's holding, cool, it's going to stay bearish. But if this breaks, coupled with that gap, you have yourself a phenomenal entry to the upside.
Yeah, Josh, leave it right there for a second. So if you go back to the candles at 12:10, at 12:10, where you got that
Yeah.
right there.
Yeah. Right here.
So that candle right there, yeah. I don't know if you know about fair value gaps, or I just heard about them. I don't really know exactly how they work, but there's a perfect zone from that level that you drew right there to that 12:05 candle, and we retested it like perfectly and ripped off of it. And I was just watching that as price came down and retested that.
Yeah.
But I just thought that was cool.
Yeah, I think
I don't often plot them, and I don't often watch them, but that was a great example.
Yeah, I think I don't know. I've never used. I don't know what they are, other than the fact that I guess it's some sort of structure, some sort of gap. Yeah, but that's the thing, right? Once again, it doesn't matter what it is. If it gives you an understanding of what you're looking at, it creates opportunity. That's it. That's why, like, when I'm on Instagram and I'm watching everybody with all their strategies and this and the third, it's not that this strategy works better than the other. It's that you understand it so well that it provides consistent opportunity for you. That's literally that's all the market is. There's not, my strategy is better than theirs, or theirs is better than mine, or that doesn't make sense to me. See, when we get weird, or when we get into it like that, is where we tend to get short-sighted, at least speaking on my own experience. So I've learned to be like, okay, what are these other traders doing, and how are they seeing opportunity here when I'm not? And then I'll just take that, stash it in my brain somewhere, and understand, what works for me, and trade it. That's.
I think what it comes down to is what you're thinking about while you're putting on a trade. And if what you're thinking about while you're putting on a trade helps you, then that's a good thing.
Yeah.
It doesn't matter. Like, it doesn't matter
Yeah,
what strategy.
exactly.
And if it helps you highlight the things that are important to you, then it's going to help you win.
Yeah.
And that's at the end of the day, I think that's the most important thing.
Yeah. 100%.
Marquis,
what up? Mega sell-off, mega gap. Bro, once again, dude, understanding that gap, I'm not ready to be taking these long down here. I'm really not. But that's not to say that might not be something I look into going down the road, especially trading an instrument like SPX. I definitely want to dive into what sort of returns, and I don't know, just start, even if like you said before, even if we don't trade that, but use that as an understanding of what the market's doing. Like that really stuck out to me, to the point where I was like, okay, buyers are here. It makes sense that they defend this. It kind of got me out of bearish conditions where the old Josh may have shorted up here. You know what I mean? So we rip above it. We come into pre-market low. Understanding bearish conditions were invalidated here at 500 helped me kind of look at, I was seconds away of taking this short. I was very close. I just didn't like the retest. And I guess what kept me from it, and you could hear it in the live, me and Dan were talking, is the strength buyers showed here, right? Like I didn't want to short into the buying that we seen. I just didn't want it. This was a, I guess, like an 80-cent move, but I just didn't like it. Once again, instead of taking setups, I find trading the story is so much more beneficial. So closing above the 9, rip above pre-market. Once again, extreme gap, right? There's a large gap here. So I do not long it. Remember, Darren, I was like we wanted it, but it was just too extended. So I remember when this was completely green, I felt like I missed the whole move. I'm like, I'm like 8 times. I'm like, oh, dude, this is garbage. Missed it. Then price came back into the 9. It just really barely touched it. And then right here, sellers lost. So at this point, sellers had one shot, in my mind, to invalidate buyers here at PM low. And they could not close below this candle. So at this point, I'm like, okay, we're about, 20 cents, 40 cents away. I can accommodate the risk, put the risk on the table. And you can see, though, This is what we call critical point analysis. It's the point where the ball is on top of the hill and the little feather gets it rolling, and then it picks up momentum. See, right here, sellers are trying, but they can't. So when sellers can't hold this, in my mind, I'm like, okay, if they don't hold this point, we got an imbalance here from pre-market low to open print, right? So that's kind of how that's why I took that long, and then obviously we longed into it.
And as well, Josh, that really sharp bearish candle that we got at 950. That point where you said sellers had one shot to defend that, and if they didn't, then they were moving up. That perfectly lined up with that little, that last little trap buyer.
Yeah. Oh yeah. I love how you see that, bro. Like that's very That makes a lot of sense.
I love to think about trap buyers and trap sellers.
Yeah.
And because I've been there, I know what it is to be in a trade and have my hand on the sell button and be like, if this moves anywhere here, I'm getting out.
Yeah.
Because I've been there and I know it, and I know the feelings that they're having when price is dancing around at that level. So when I see it play out, I'm like, oh, okay, now I understand the story.
Yeah.
So,
yeah. Exactly. So now you're playing the story instead of the pattern. Bam. Always play the story instead of the pattern. Like, if I was playing the pattern here, I would have. Who knows where I would have got? I probably wouldn't have got in because there was no pattern. Instead, I'm playing the story. I'm playing, the point where sellers lose it. It's the most probable. And another reason I wanted to play this level or this candle or whatever is because I literally only had to accommodate, it was about 40-cent risk. Maybe more. It's actually a lot more risk than I thought it was, but it was. This 9 was so tight the price that if buyers lost it, I would have known immediately. So it's crazy, bro. I'm now putting risk and evaluating risk based on the 9. Obviously structure too, but I don't need to wait until pre-market low in this case. I'll understand conditions are bearish much sooner. That's what I should have done on this trade, but I didn't. I was so addicted to it was going higher. We couldn't close above it. Now, multiple times this week, you guys heard me say, I got in this long when we closed above the 9, but it wasn't way above the supply zone at the top, right? Like it was down here next to pre-market low. It was like at the bottom, you know what I mean? After moves are very extended, you have to be careful of just getting in the trade. So, yeah, that was it. It's a tough day. There was a lot to learn from this. I got to wrap this up, guys. Thank you, everyone, for showing up. Hope everyone has a great week. Dive into where your mistakes are. I mean, you heard me and Darren open up really deep about some stuff that we're working on, right? And it just goes to show, guys, this is not – no one's immune to the trading errors, right? So dive deep into them and welcome them, so. All right, I hope
heavy journaling this week.
Yeah.
And I'll see everyone next week.
All right, peace.
Hey, Dad, watch me.